Our guest today is Stephen Howe. Stephen Howe is an industry-recognized technology entrepreneur and investor. He's currently the chairman and CEO of New Fire Global Partners, a tech advisory and software development firm that is based here in Cambridge, Massachusetts, with team members worldwide. You can follow him at twitter.com/SteveHowe. This show is being recorded and will be included in my podcast series called Digital Health InvestorTalk. Subscribe to our podcast on Apple, Google, and Spotify. This is not investment advice, and we are not investment advisors. Today's topic is getting generative AI to work for you. Digital health companies are eager to apply generative AI to the biggest problems in healthcare, but are there pitfalls in the way? First off, here's the format of this investor talk. We'll talk for about 40 minutes about news and current events. After that, we'll move to our main topic of the day about AI, and we'll be taking call-ins from our audience. In order for you to do more than just watch, you need to register an account with Callin. To register, you can access Callin at callin.com or through the Callin social podcasting app in your app store. The Callin platform works similarly to Twitter Spaces for a modern social audio experience. Once you've registered, you can use the text chat or press the call-in button to indicate you'd like to speak up in our discussion. So welcome, Stephen. Welcome to the show.
Thank you, Stephen. I'm not sure if it's confusing you get the same name here, but I guess I should say something like long-time listener, first-time caller, or something like that. But I've always really appreciate your thoughtful discussions, and I look forward to getting into it with you today. By way of introduction, sometimes I introduce myself as kind of an MIT grad and Harvard dropout, and kind of while that broke my parents' heart, it's, I would say, not an uncommon story around these parts, and a little bit of a badge of honor for entrepreneurs. But the company I dropped out of college for was to start a company called Patient Keeper with my Harvard Medical School professor and friend, Joe Bonventry. And while there are many kind of twists and turns, we had many years of some pretty interesting growth. And the whole adventure is quite storied. And I think literally there's a book called Smart Ups, written by our then chairman of the board, which I think is still available on Amazon.com. I started another company with another physician friend, Bernard Huang, who was once the medical director at Apple Computers at the time, before now they're Apple, I guess it was Apple. But also that was a great example of entrepreneurial adventure, I guess. And then, just to share some more background, at 43, I got married for the first time. And I was going to take a break, and that's when New Fire happened. It's kind of it's a quote that John Lennon that I always get wrong, but something like "Life is what happens to you when you're busy making other plans." So at this time, I really was advising a lot of private equity, a lot of VCs, a lot of tech CEOs, having a lot of fun. I discovered I was really good at it, and was making some very good money. It was on one of these kind of engagements. I was helping a private equity group in New York City take a look and try to drive a turnaround for a personalized medicine genomics play in Cambridge, Massachusetts. And we were able to lead a pretty successful turnaround. And as part of that, the company kind of exited, and actually with the chief data officer of that company and about 50 amazing engineers, I hired them and started New Fire Global Partners, and that chief data scientist actually became my co-founder. So today at New Fire Global Partners, we provide advisory services, and with these engineers have the kind of actual muscle to not just give advice, but get it done. And since we started the company about 6 or 7 years ago, we've grown to be about 700, 800 people around the world in Europe, Latin America, and Asia. And we provide a combination of advisory services from assessments, interim leaders and transformations, including AI transformations. So we'll talk more about that today. And we also build out dedicated software teams all over the world. 80% of our business is in healthcare, which ranges from provider, payer, life sciences, and consumer. And our customers tend to be publicly traded or PE backed, but we also have some VC backed and some early stage startups. So I'm hoping some of these kind of adventures we've had that I've had will be interesting in today's conversation with you, Steve.
That's great. Thank you. So now we're going to move on to the current events section of the show, and we'll talk about the macro outlook. So I think that the big news here, there's a couple of things going on. One is that last week the Fed said that although it wasn't raising rates at that FOMC meeting, that it expected it could likely raise rates 2 more times in the rest of the year. So I'm interpreting that as a big setback for the innovation economy, for entrepreneurs, for investors, unfortunately, because we were looking to beat inflation and we were looking to resolve uncertainties. And now that the Fed may raise rates twice, that has reintroduced uncertainty. So and I have an optimistic prediction about the investment environment for the future, but I'm moving that back a bit. So I was saying that we're going to see VCs return to a friendlier investment environment in the third quarter, and now I think it's going to be the fourth quarter. And I'd say that the conventional wisdom on that take is that it's going to be 5 or 6 quarters in the future before VCs lead investors start investing again at the same rate as before, and the investment environment turns a little better. So that's my interpretation of that. Steve, do you follow macro issues much? Do you have any thoughts about what the Fed did last week?
Yeah, I mean, what you're describing, we've seen, much of the same in the conversations that we have, some of these informal conversations. Like I said, it's the downturn brings uncertainty, and we see challenges just across the board, especially for earlier stage non-revenue generating companies, but even kind of VC-backed companies that don't yet have a line of sight to positive EBITDA. And maybe relevant to the conversation we'll have later today, I think the exception, maybe the bright spot, is around companies that are embracing generative AI. There's kind of there's gold in them hills kind of feeling where there's some like speculation. And, I was looking at some PitchBook data, and it seemed like, generative AI deals have gone from to 20 deals in May of 2020 to over 200 in May of 2023. And what we've also heard, and I'm a limited partner in a couple funds, what we're seeing is for kind of startups that have an generative AI component, there's probably a 20% premium on valuations. So it's an interesting kind of signal on the times.
That's great data there too. Thank you. So another term has entered the lexicon, and that is de-dollarization. I wasn't seeing this used at all a month ago, and now Janet Yellen has said that we will continue to see a slow de-dollarization. And so the de-dollarization is bad for innovators in the U.S. It's bad for young company leaders. It's bad for investors. And this is a trend that's probably going to pick up a little bit. And basically what's happened is that you can sort of view a country's currency provides an extremely valuable service to everyone who uses it. All currencies are fiat, and all of them inflate at least a little bit. And you can view that inflation as like the service fee you're paying for having this incredibly useful currency. And the US dollar is by far the most useful and most used currency all over the world. And in countries where you have 2 different countries and neither one of them has the dollar locally as its currency, and they will transact in dollars, and certain major commodity players like Saudi Arabia will only sell oil in dollars. And this causes everyone to need dollars and to hold dollars and use dollars. And that's extraordinarily good for the US government, which gets to do things like print money through seigniorage and have it be that use spread out over a much larger economy than just the economy of the US. And what we've seen happen is there was probably too much printing and spending because of the pandemic, because of the response to the pandemic, the attempt for the US and the whole world prevent a major global recession during the pandemic. And this then has contributed greatly to inflation that instead of being 2 or 3% creeping inflation is now 5, 6, 7%. That's more, it's a strong inflation, not yet galloping inflation. And so some countries have seen this and they're saying, hey, I stored a lot of my wealth in dollars and I just saw it lose 7% of its value. And so I'm going to diversify now. I'm going to move to other currencies. I don't quite trust that nice US dollar that's so useful that only had 2% inflation in the past. There's also countries who feel a little burned. And an analogy here is that when Edward Snowden, fled the U.S. and the National Security Agency and revealed that the U.S. was tapping the phones of Angela Merkel and the president of France and others, those countries said, we have to, for the sake of our sovereignty, we have to have our own chips, our own systems, our own security for them. So we can't just have the U.S. listening into us. And likewise, some countries have watched the U.S. go after Russia and other countries and confiscate their dollars and their reserves, and have said, well, we can't have all of our, we may be, make up, choose your country. We may be Switzerland, we may be Thailand, whatever. We can't just have all of our money in dollars, or the U.S. might do that to us, even if it seems unlikely. So we need to diversify. And that act of de-dollarization, of countries making a conscious choice to make the dollar half or less than half instead of nearly all of their reserves, that sends that money back to the U.S., which is inflationary, and that's why it's bad for the innovation economy, because that inflation is intrinsically bad for young companies and creates uncertainty as well. So young, risky, earnings negative companies want low interest rates and low inflation to get high valuations. And if we have high inflation because of de-dollarization, those dollars come back to the U.S. That's bad news for the innovation economy. So that's an interpretation of de-dollarization. And Yellen, I think the government was not talking about this, or was talking about it with saying it wouldn't be a problem. And Yellen last week for the first time said that she expects it will continue gradually. So that's the first recognition, first interpretation of it we've seen from a major government official. Steve, any thoughts on that?
I missed that, but that's really interesting. I mean, thanks for sharing that.
So then the next is inflation. So I think the last major inflation report said inflation was at about 5.9%, which I interpreted that as being, reasonable, not out of control. One economist I really look to a lot is Lawrence Summers. He's the former president of Harvard. He's former secretary of the Treasury. He speaks publicly about these issues, and he actually sees that level. It turns out he's an inflation hawk. He sees that level as too high, and he thinks inflation is still a problem. So he is supporting the Fed, saying it may raise rates further. And so I think that shows there's a consensus to continue to raise rates. Once again, that's bad for the innovation economy. And then recession concerns. I think the conventional wisdom now is that we will go into a recession. It may be a shallow recession in the second half of this year, in the third quarter or the fourth quarter. Fidelity is saying we're at the end of an expansionary period. We will go into a contractionary period after that. Lawrence Summers saying it's coming soon, and both saying it could be shallow. And that's bad for innovators as well, because that makes the product buyers feel poor. If your product buyers are hospitals and payers and consumers and the pharma software, the pharma tech budget, or other budgets like that, it makes you're an innovator and you're trying to sell into these enterprises, and it makes them feel poor. So anyway, that's any thoughts on just this sort of wrap up and what it means for innovators, Steve?
Yeah, I mean that's right. I mean, we definitely see this, both in our interactions with technology companies. I mean, it's classic, right? I mean, there is there's a fear, a lack of confidence in making longer term investments. Capital's hard to get, so for the clients we work with, the mean time to some return on the effort is much shorter. It's just a signal everyone's very cautious. I think it's so hard to predict how things play out, but without really the same data that you have, that you just referenced, yes, it doesn't. I know everyone wants this quick and speedy return. It feels like it's going to take a little longer before we get kind of through the knothole here. Mm-hmm.
So then, some more positive news. We've been seeing a tech rally recently, and I think this was unexpected. And we've seen a lift in the NASDAQ, and I always like to watch the NASDAQ as a proxy for what tech valuations are. And so the NASDAQ, I think, is at around 13,700 and has been continuing lift over the past week. And some of that is being driven by optimism about AI in the NASDAQ. So, companies like chip manufacturers or other companies that may benefit from the boom in AI. But and if you talk to Wall Streeters, they will say that that they have to put their money somewhere, and most categories don't look great, but that tech and the NASDAQ is looking better than others. So on a relative basis, they've been putting their money in the NASDAQ. And also a positive surprise there is that some commentators are now saying that the IPO window is open. For the whole duration of my show, every week we're on here, the IPO window has been closed. But for the first time, we're hearing the IPO window is open. And this is a surprise because of the very successful IPO of Cava, a Mediterranean restaurant chain. Cava went public. It was, people have been saying that buy-siders, that's like the Fidelities and BlackRocks of the world, that they want IPO product. And sure enough, they wanted this. They oversubscribed. And since IPO, it's been up 117%. So that's quite a lift there. And what happens is when this happens, now, unfortunately for us, this is in restaurants, and we want to see this in tech and digital health. But it's a strong signal that you would see a similar performance in tech and digital health. So this is enough to cause. So the IPO window was closed a week ago, and that means only really special companies can rarely make it through. And then people watch carefully the performance of those companies. So here's a huge hit. Cava is a huge hit with the market. Now, back in May, we saw Kenvue IPO. This was the consumer division of J&J. This one is a much closer comp for us to watch and much, much more useful for us to watch because this is in healthcare. And we want to see healthcare and tech companies go public first. And that would mean, if they're successful, that would mean that there can be some digital health unicorns can go public after that. So, some observers are saying that they're going as far as to call that the IPO window is now open for everyone because of the strong performance of Cava. And I'm going to stick with my story, though. My story is that we're watching Kenvue. Kenvue IPO at $22 a share. It's up since then. It has stayed up. That's good. That's what we need to see. Next, I'm watching ARM is planning an IPO probably for the fall. This seems to have been going relatively slowly. That's not a good sign. But ARM, the UK chip maker, that's tech. We want to see a tech company IPO and do well. And ARM is positioning itself to benefit from the artificial intelligence stock play since their chips are used for AI. And then also Instacart. Instacart has said it will go public. We want to see, I still think we want to see ARM and Instacart go public and see their stocks go up and stay up. And when that happens, you will have tech company boards and digital health company boards will start to tell their CEOs to take steps to go to IPO. There's definitely, on the supply side, there's lots of these companies that want to IPO to get liquidity for their investors. On the demand side, we're seeing that buy-siders at Fidelity, BlackRock, et cetera, want to buy IPO product. And so, that's two great tastes that taste great together. We just need to see a little more proof in the form of these two IPOs, ARM and Instacart, that haven't happened yet and that I'm following the progress of. So, and this is part of the optimistic case, is that the IPO window has been closed for a while, but I think it will open sooner than market consensus. I think we'll see the IPO window open, in this quarter or next quarter for companies and then I think that the conventional wisdom is saying that it'll be 4 quarters until the IPO window opens. And this is part of creating a better investment environment because investors can feel more confident that they're going to get their existing product out to the public on the public markets, and they can make more investments, and they can start doing things like making CD and crossover investments because they can see the timing to a reliable IPO. So, Steve, any thoughts on the IPO window?
Yeah, well, this is so fascinating. A lot to unpack there. There's definitely a cognitive dissonance, right? I mean, uh, it's it's kind of hard to absorb. I'm just curious, and I don't follow this as closely as you do. I guess with the IPOs priced conservatively, is that part of the, the what's generating kind of positive results?
Yes. So, and ironically, that 117% lift, that is making observers like Jim Cramer or you or me excited about the stock market. But to bankers, some bankers are slapping their foreheads and saying that they goofed up on the pricing. So traditionally,
they left money on the table.
Yeah, but they didn't know, and they probably couldn't have known, but they did. And But the way the process works is that in a well done IPO, that the company and their bankers really, really, really want the very best mutual fund investors, not hedge funds, not retail, to commit when they're in the book building phase to buy large chunks and implicitly to hold. They can't force them to hold, but to commit to buy and hold. And that will lead to support in the aftermarket, a lack of excessive volatility,
Sure.
More confidence of other investors. And so what they do is they price it. They figure out, well, there's a range. This company has the best brands and higher margins, so we'll price it at the top of the range of its peers. And then they literally apply a 15% discount to it. And that goes to, and then in this process, there are leading buy-siders at places like Fidelity or BlackRock who will make an early big commitment. I will commit to buying a big allocation. And then they get those shares at the public offer price, which happens at the morning of the IPO, that is a 15% discount. And then the reward they get is that in theory, they're going to see, and this happened with Kenvue, it goes up 15% and then it stays up 15%. That's the reward. And that's alpha. And that's alpha they only get from being able to participate in an IPO. The problem is that 6 months down the road, support craters, stock price falls. They'd like to sell, but they committed to hold for the long term. And they're not legally held to that, but they're committed to hold for the long term. And then if they sell to get out, then the next IPO that comes along, Morgan Stanley is not going to like them anymore.
Sure.
So that's how that game is played. So then let's see. So that's a review of the macro outlook. Any other thoughts on that before we move to the next section, Steve?
No, that's great. Thanks for sharing all that.
So next is news from the week. So in this part for our audience, if you have any stories you'd like to get our reaction to, feel free to put them in the room chat. But my story of the week here is going to be, first of all, it was a slow week in terms of digital health news in the innovation economy part of digital health, which is young companies and VC investors. Slow week, again, more layoffs and shutdowns than fundraisers and launches, unfortunately. But we did see hybrid behavioral healthcare company Octave Health raised $52 million in a Series C. And that was led by Cigna Ventures. That was probably partner Tom Olenczak there. Backed by Novo Holdings and Avidity Partners. The CEO at Octave is Sandeep Archaya. The company offers in-person and virtual behavioral and mental health care with personalized care plans for couples, individuals, and families. Competitors are like Lyra Health and Spring Health. So what do I see from this deal? First of all, there's not a lot of deals announced this week. I mean, this is a week's worth of deals, and there just weren't many. Usually 2 years ago, we were seeing, over 3 deals a day. So that's a measure of how down we are. But the first thing I'd say is that this is reinforcing the idea that investors like hybrid care. So hybrid care is care where there is, first of all, we're talking about care, not software. So this is VC investors who like investing in software products, but in digital health, they're investing in care companies because it's so hard to sell software into the healthcare buyers. It's actually easier to start a medical practice than it is to sell software to a medical practice. So first, it's a care company. Second, it's a hybrid care. Hybrid care, that's a term being used a lot. Fundamentally, it means that they're offering bricks and mortar care and also online care as well. And that gives them an advantage in both areas. And often it means new care delivery models. So for example, instead of seeing a therapist by driving to their office and parking and waiting in their waiting room and meeting with them, you are seeing a therapist on your phone, for example. So this is what we're talking about with hybrid care. Next is investors doubling down on what I'll call de-risking. So we're seeing a bimodal distribution here. Some investors very excited about investing in AI at the seed stage, and some investors confident in investing at the Series C stage for probably inside rounds, or this was not an inside round, but oftentimes investors are picking winners in their portfolio company and doubling down on them. But then the poor companies who are trying to raise an A and B find that lead investors are not leading, that they're swimming in the pool, but those lead investors are sitting on the bleachers, not jumping in. And we're trying to figure out what it's going to take for them to jump in. So this is, I think, investors doubling down on de-risking. They've identified a company they think is a winner, and they're putting more money behind it, a big round behind it. And lastly, also, just there's been a huge trend of investing in behavioral health and mental health in the market. And so this deal is consistent with those three. It shows that those trends are being sustained. So, Steve, any thoughts on this deal?
In the specific deal, I think this is a pattern we've seen before, right? I mean, I think it's in terms of investors de-risking, saving their dry powder and all this. I think for the earlier stage businesses, it's so tough. There's always been a kind of a chasm between like that early angel funding and a real Series A. And it feels like at this time that gap is growing even bigger, right? So I just, I certainly feel for all those, early stage, those entrepreneurs of early stage businesses. It's really clearly a tough time, but separately, I'm really interested in getting your thoughts on just we've seen this focus and interest in behavioral health. What do you think is driving that? I mean, I know there are new, there are new drugs coming out and so forth, and a lot of kind of interest and focus on, therapies that, support, behavioral health. Obviously, there's an addiction kind of focus as well out there. But what do you think? What's making this area what's making behavioral health so hot?
So that's a really good question. Before I address that, by the way, just for our audience who's hearing this sort of doom and gloom news, I've been talking to a lot of VCs, a lot of young company leaders who are watching VCs, and my estimate is that when it comes to Series C, D, crossover, and IPO, the number of those happening in digital health is down 90 to 100% in that area. Then in rounds A and B, that is down 75% as compared to the boom years of 2020 and 2021. And then seed rounds seem to be down about 25%. So they're not down all that much compared to boom years. And some of that's being driven by AI deals. So now, investor interest in behavioral and mental health. So if you had gone to employers, and here I'm talking about employers, VP of HR, and benefit leader, and these are people who really know their medical trend, they really know what their large company, the progressive large employer, is spending on health. And you said to them, what are the chronic conditions or the major conditions that you are spending on, that you are concerned about, that you want to do something about? And they all would have said the same thing. They would have said, number one, diabetes; number two, prediabetes and other metabolic; number three, hypertension; number four, musculoskeletal. And so literally we've seen hot companies in all of those areas. So diabetes, that's literally Livongo right there. Musculoskeletal, that's Hinge and Kaya and others. So then, starting with the pandemic, they started to say also behavioral health and mental health. So if you think about it, you had people staying at home. That's a big life change. Maybe they got some lift in their life from talking to their friends at work. And now they're working from home. And also the world is being consumed in a giant, world historic first, pandemic. And they're watching this unfold, and it's leading the news every night. And there were also anecdotal stories that alcohol consumption went way up during this time. So you're locked in your house. You get to go to the supermarket.
No comment, Steve. No comment.
You buy the alcohol and then you drink it, and you're at home all day or whatever, and you aren't hanging out with your friends or whatever. So and then this elevated. So people really care about what those issues are for employers. In fact, a lot of people, really want to figure out how they can somehow be in that top 5 issues of most concern to employers if you have a digital health solution. And all of a sudden, behavioral health, mental health became a clearer category, and became part of that top 5. So it's now part of the top 5. And in addition, it might also be a generational thing, which is that younger people are being much more open about saying, I have ADHD and I would like treatment for it, whereas older generations, might have, wanted no one ever to know that they had ADHD, wouldn't want the bill to appear on their medical record so that someone somewhere might know someday that they had ADHD or something like that. So a younger generation that may have more issues, but also is more open to talking about issues and seeking help about issues. So that's my thoughts on that.
Interesting.
And any other news of the week from you?
News of the week? No, nothing to add. Nothing to add.
So then I'll touch on valuation issues. So as a whole, digital health, high-flying, high-growth, public, earnings negative digital health stocks are down 80% from the boom. So this is, I heard some stats like, so I'm not sure if these are still accurate, but they were accurate at some point. Some analysts put together some numbers like every public digital therapeutics company is trading at less than cash. And every SPACed digital health company is trading at less than paid-in capital. So I didn't check those myself, but this is some of the scuttlebutt that I've been hearing, which then means that if they're trading at less than paid-in capital, it means that it's going to be hard for management of them to ever, for their equity to ever be worth anything. And so valuations are down a lot. The most recent SaaS Capital Index for the end of May found median valuation levels for all SaaS companies, that includes high growth, but also large and cash flow positive and stable companies, of 6.5 times forward revenue. So that's an interesting number to reflect on as a valuation number. And that was trending up a little bit from the prior month, which is probably reflecting the lift in the NASDAQ due to the AI boom and tech optimism. And the long-term median of all large public SaaS companies is for them to trade at about 8 times forward revenue. So during this, the median has sunk by 1.5 points, basically. And we might expect in the future that it might go back up to about 8, but it may not go all the way to 8 because we're now in a higher interest rate, higher inflation environment, probably for the longer term. So meanwhile, though, high growth SaaS is trading at 8 to 12 times forward revenue. So those are some growthier valuation numbers. And this compares to the highs of 2021, when the median SaaS traded at 16 times forward revenue and high growth traded at 30 to 35 times forward revenue. So those are some astonishing valuation numbers that were far above the long-term historical trend of 8 times for average, not high growth, SaaS companies. The valuation environment is still risk off. What risk off means is that investors, don't like earnings negative growth stories as much as they would. They're preferring safety. They're preferring cash flow positive companies. So VCs are saying that companies need to belt tighten. Their own portfolio companies, other companies, that they've been saying this for a year, and companies have not belt tightened enough. and therefore they still need to belt tighten further. And that companies that got high private market valuations, those are now unrealistic and need to come down. But in general, there are many companies that are not addressing this quickly. So if you need to raise money and you formerly were valued at 35 times forward revenue, that's probably going to have to come down. But some companies, for various reasons, want to keep it that way. For example, a CEO might be happy with a fundraise at a new valuation level at a down round, but a board member might not want to see that. They might like that number on their books, staying at the formerly high valuation level. Maybe they're a VC, maybe they're trying to raise a fund, maybe they're trying to claim success in this area of their overall valuation levels. They don't want to see that come down. So you have a conflicts building there. You could have an acquirer is willing to pay a fair price for a company today, but the company can't sell itself because it can't bring itself to admit that its value has fallen. So these are happening, but there's a lot more still in front of us, unfortunately, to work its way out. So that's a little more about what's going on in the world of valuation. So any thoughts on valuation issues, Steve? Are you seeing this too, or something different?
Yeah, no, we're seeing that everywhere, right? I mean, it's a challenging time. Again, this isn't new. It's not new. I mean, this is a cycle we've seen before. Obviously there were valuations coming down, like you said, the triggers cram downs, and then also, boards with different agendas, and that's just I've been there, done that. It's tricky for a CEO to navigate. And obviously challenging. And I do worry. I think about all the managers and leaders there. This can be very disincentivizing for management. And so, while there's still, there are brighter days ahead and value can be created and harvested, but I think this is an interesting phase of, these adjustments that, reset the market value, but at the same time, we got to keep the management team incented, right, to succeed and to continue to play hard. So there's some art and science, in this stage, I think, of when the economy is like this. And again, the tricky thing, as you alluded to earlier, no one really knows when it ends, right? So it adds a lot of complexity.
Great, thank you. That's a good perspective. And from our audience, Dave is commenting that many mental and behavioral health issues are symptoms of metabolic dysfunction. So, as a society, obesity levels keep rising and rising. People eat rich diets. They don't exercise as much as they should. They become obese, and then things start not working so great in their body. Their ability to handle sugar, starts not working as well. They get on a path to developing diabetes. This is metabolic syndrome. And so I hadn't made this connection before, but with obesity rates being so broad-based and rising, some of these mental and behavioral health issues could be symptoms of metabolic dysfunction brought about by, eating too much, being too sedentary. So that's very interesting. Thanks, Dave. So now moving on to upcoming conferences. So here we talk about our favorite conferences, whether we would go. I try to look at things from the perspective of the CEO of a digital health company in a specific sector. Would you go to this? Would you pay the fee? Is it worth the time? What could you accomplish at this? And for our audience, if you know of conferences and you are asking the question of yourself, should I go? Should I pay the money? Feel free to type it in the room chat, and we'll give you a mini review of that conference. So my first one I'll bring up, this is going on right now, the Cannes Lions International Festival of Creativity, June 19th to 23rd in Cannes in France. So why is this conference on our list? By the way, tickets are 4,000 euros, and you can buy tickets up to 10,000 euros. So it turns out that there's a part of digital health, which is pharma doing consumer advertising that goes to this conference. So pharma goes to, all those ads on television that you see, take the purple pill, whatever. These are brand managers who are spending lots of money on flashy content for consumers. And their agencies also go to the con, and they get awards there, that sort of thing. But I heard a joke, which was that if you're in digital health and you hear that, if you work for a young digital health software company that's venture backed, and you hear that your CEO is going to the Cannes Lions International Festival of Creativity, you need to start looking for a new job. So no, I probably wouldn't go to this conference. This is more for brand managers at big pharma with big budgets. This is not for the software vendors that sell into pharma brands and product managers to go to, I think. Steve, any thoughts on the
correlates with it inversely correlates with capital efficiency, I guess. I mean, that's interesting. I did not know that. So thanks for sharing.
So then the Drug Information Association annual conference is in Boston, June 25th to 29th. Tickets are $2.4 thousand for this. And, Bio is just a few weeks ago. I think Bio is a great conference to go to for a bunch of reasons. And every one of those reasons is weaker with the Drug Information Association. And so I think this is more for pharma industry people, especially people who are on the clinical side as opposed to the commercial side of pharma, for professional education, for networking, for other issues like that. So if you sell into the pharma clinical budget, if you sell clinical trial automation software, that could be a good reason to go to this conference. But that was also a great reason to go to Bio, which was just here. And so this is like a second runner-up. If you missed Bio, maybe you could make some hay at the Drug Information Association. So the kinds of people you meet, this is, again, not as many as at Bio, but it's like pharma innovation executives, they'll be there. Pharma venture funds, some of them will be there. Venture funds that invest in pharma tech, some of them will be there. 95% of the people at this conference are there for the molecules, not the bits, but you're there for the bits. And so finding the 5 or fewer % of people who care about software and bits is a maze. It makes it a harder conference to go to. It's not specialized in digital health. So in general, I'd say, if you're a CEO of a digital health company that sells into the pharma clinical budget, maybe go, but it's better to go to Bio than this. So any thoughts on DIA this year?
Well, I'm with you. I think that's spot on. I will be there, but that's largely that people that have been discussion and know will be there as well. So it's an opportunity to just get time with them in a common venue. But I think you're spot on in terms of the comparison between Bio and DIA.
And then next, I'll just briefly touch on Health 2.0 in Las Vegas, July 10th to 12th, $2,000 tickets. So this is actually, this is so unusual. So I know Matthew Holt, who founded Health 2.0. Steve, you probably know him as well. And I've spoken at Health 2.0. I've gone to it for a few years. Matthew Holt, it was visionary to create this conference, and I'm glad he did. And then he ultimately sold it to HIMSS. And then HIMSS changed its name and completely dropped the use of Health 2.0. And then strangers who Matthew Holt has nothing to do with and who don't know him, he doesn't know, started a new Health 2.0 conference because HIMSS had not dropped the use of and did not protect the name Health 2.0. And so I think this is the first year. I haven't been to this new conference. I'm not impressed by it. I think it takes years to build out the networks. You're convening an ecosystem. You're convening investors, young companies, consolidators, others together at a conference. And I just somehow doubt, having not gone, but knowing that this was a name picked up, because HIMSS didn't protect it, and that Matthew Holt had nothing to do with it, and didn't even know. I told Matthew Holt about this conference.
That is so strange, I have to say. I did not know that backstory. I just assumed it was reboot. Wow. Yeah. And I'm just curious if I mean, the whoever's driving the 2.0, Health 2.0 this year, I mean, do they have a pedigree in this space, or is this purely opportunistic?
Don't know. I'm guessing it's opportunistic. but it's not affiliated with Matthew Holt. It's not affiliated with HIMSS.
So weird.
And that's July in Las Vegas. Not going to that. Although the original conference was a product conference for young digital health companies. That's what the original conference was, and then it grew bigger and became more of a convening of the early stage innovation sector. So finally, I'll just mention that I am hearing people saying that they are buying their HLTH tickets early. So HLTH 2023 will be in October in Las Vegas. And I'm hearing people saying they're buying their tickets early to get the discount. HLTH tickets are pricey. And that they're also thinking of not going to JP Morgan, which is in the second week of January in San Francisco. So that's interesting. And I will probably do that. I'll buy my HLTH tickets early. And then I may also go to JP Morgan San Francisco just because I like it so much. And if people aren't going, then that opens up an opportunity for me to throw a party. And so I'll go and throw a party there. Stephen, any thoughts on, do you have a favorite conference?
I'll probably attend both. I hadn't gone to JP Morgan for years during the pandemic and all that. And I didn't go to the one in January, and I regret it because I just, for whatever reason, I'm not raising money, but it's just a great opportunity to meet, old friends and so forth. And I didn't go. And it was strange because that week, everyone I knew was over there. and I thought, wow, I really missed out. I should have gone. So I think there's a little bit for me, once bitten, twice shy. Will probably be at JP Morgan in January this time.
That's great. And so on the one hand, I think that the value is there in JP Morgan and people are definitely, the goal is to get, my goal is to get like 5 or more good meetings per day when I go to JP Morgan. Yeah. You can definitely do that. You literally write to people that you barely know and you just assume they're going to be there. And then you say, let's meet. And they say yes, because they're all in meeting mode or whatever.
Right. You have about 5 coffee meetings, 2 lunches, 2 dinners, and feel totally bloated by the end of the day.
And enough people are going that still works, and JP Morgan conference is back. On the flip side, the JP Morgan conference, the real money of what JP Morgan is doing there is about public biotech, and so everything else is just a sideshow. No programming for digital health, et cetera. And so the HLTH conference is fundamentally convening the ecosystem of innovators, especially VCs and young companies. So that's a home run. That is a conference literally about what we do. And public biotech has almost no role at HLTH. And so it's trying to come in, and for our part of healthcare, the software innovation part of healthcare, HLTH is meant to be a category winner, and it's positioned on the calendar such that if you go to it, you don't need to go to JP Morgan. And a lot of people don't like, taking taxis in the rain at JP Morgan from small hotel to small hotel, and that sort of thing. So,
for $800 a night too, or whatever the crazy hotel costs are. Yeah.
Yeah. So then, so did you have any other conferences you wanted to mention?
No, I think that's a good list.
So then, industry reports. So I didn't see any particular reports this past week with important findings relevant to our audience. Stephen, any reports you want to mention?
I was lucky enough to be in a briefing by McKinsey about generative AI. It's obviously something that I follow very closely, and and something obviously we'll be discussing in a little bit. And I think it was interesting. I mean, I can't really quote it because it was I didn't personally pay for the research, but it was very interesting. I thought it was on multiple levels. I mean, for better or for worse, consistent with kind of our thoughts and observations. I think the thing that was maybe most humorous or maybe insightful was, folks at McKinsey kept saying, well, check again in about 2 weeks because it's such a rapidly evolving space. It's obviously a very interesting topic. And we definitely see patterns in terms of kind of questions and that they were getting, we get all the time as well at New Fire. And I think some similarities in terms of how we're approaching this kind of evolving and very dynamic space.
That's great. Thanks. So then moving on from industry reports to personal notices. So I'll just cite my next Boston Drinks Night for July. It will be July 13th at the Liberty Hotel Bar, 5:30 to 8:30 p.m. And just convening the innovation part of healthcare in Boston, especially the software innovation part of healthcare in Boston. And so I'd love to see anyone from my audience, come. You can register by going to stephenwardell.eventbrite.com. You'll see a list of all the shows and all the events there, and hope to see you there. So, Stephen, do you have any personal notices for the audience?
Well, first, I'll plan to see you at the event. Our CTO Will Crawford and I plan to be there and hopefully have a couple drinks with you and some of the your and I guess other colleagues. So we're looking forward to that. And for this work, it's great meeting people in person. I mean, it's coming out of the pandemic. I kind of feel like these events are not even more important, but even maybe in some ways even more enjoyable. Just as people are just happy to feel the camaraderie, see everyone in 3D. I guess I'm definitely looking forward to that. In terms of personal notice, just maybe just from the New Fire perspective, I think we shared, with you, Steve, we've had a couple kind of exciting additions to our leadership team. A little over a month ago, we added Sonali Damli as our Chief People and Transformation Officer. She was most previously at Invosur, where she was the Chief People Officer, and before that, she was at Bain & Co. for about 14 years as a senior executive. So she's a great addition to our team. And then more recently, just a couple of weeks ago, we announced Will Crawford, who I just mentioned, as our Chief Technology Officer. Will's just a great guy, an industry veteran. He was most recently the Chief Technology Officer at Medically Home, which is a very successful care at home play, backed by Kaiser Mayo Clinic. I think combined they put about $200 million in that company. He was also the Chief Product Officer of a SmartSense Digi, an Internet of Things company. And before that, I guess his claim to fame is that he was the early investor and VP of engineering at Fitbit, that activity tracker company, where he joined them when they were a startup in a garage and, was on the ride to get them public. I think they got to $5 billion of market cap or something before Google bought them. So he's a great addition to our team. And like I said, we're going to try to bring him to your event and, hopefully, can have some great dialogues with you and other colleagues.
So Will is a Boston legend, and I first heard about him when he was kicking around inside of Harvard hospitals in the Boston area doing innovative things. And I learned recently that there is a legendary Harvard Medical School professor, Isaac Cohane, who I think very early in his career chose to make his career at Harvard Medical School be about bioinformatics, which people at the time thought was a terrible career move and would inevitably lead to him getting turfed out of Harvard or something and had nowhere to go. And instead, it turned out to be a fabulous area to be in. And most recently, he was given, OpenAI gave Isaac Cohane at Harvard Medical School early access to GPT-4 for medicine. And then he wrote a book about it. And what I learned was that the reason Will Crawford was bouncing around Harvard hospitals doing IT things was because that was his first job or early career was working for Isaac Cohane. So really interesting guy, innovator in the Boston area. So, well, that's great. So now we'll on to our main topic. And I guess, you have had a chance to actually use generative AI in the workplace for an enterprise and also to think about how professionals would use it in coding, which is one of the big areas where it's named as possibly helping coders be more productive. But AI has been a buzzword in IT and in healthcare IT for probably 20 years. And I like to use the example that when Microsoft Word had spell check, that was called artificial intelligence at the time. And so nevertheless, we're in revolutionary times, people are excited about this new stuff in AI. And so what's different? What's new? Why is it important now? And we weren't as aware a year ago.
Yeah, that's a great question. It's so interesting. If I were a sports commentator, I would describe AI as this overnight success that's been, decades, like you said, in the making. Obviously, a large part of that it's become so, widely discussed in the mainstream, right? To a point where, my wife, who is non-technical, she's a dance teacher. She uses ChatGPT, generative AI to, plan our family vacations, and so, to answer your question more directly, I think the buzz is largely driven by this crossover, right, to the mainstream. ChatGPT is a huge driver of that. I think the frequently quoted statistic was it? And I hope I get this right. I mean, it's like it had 100 million users within 60 days. So nothing else really even comes close to that, and that's just incredible. But even with ChatGPT, what not many people appreciate is that these LLMs, these large language models, have been around for a long time, and even ChatGPT, which is based on GPT-3, I think when it came out, that had been around for like half a year, and it didn't create a buzz. It was only kind of simply when OpenAI put a very simple front end on that LLM that it really took off. And if you listen to Sam Altman, kind of the Y Combinator, talks, he really talks about years ago about it's about you got to build these apps that people can't live without, and I think they've been successful in that regard with OpenAI, but at ChatGPT. But I mean, to your point, I think generative AI in some ways is this next step of this this many year progress in AI advancement. Where 20 years ago maybe it was more I would call it kind of rules based models. I'm not quite sure spell check counts as AI, but far more kind of hardwired, rules orientation, where there was limited decisioning by programmatic decisioning. We advanced to more machine learning, and then more recently more recently as the last 10 years, called neural networks, so-called deep learning models, and then now of course generative AI, which has been around for a few years, but has certainly improved and touched the mainstream. I think captured their imagination.
If I were to add to that also, so my understanding is that part of the way that generative AI of the type that we're seeing with ChatGPT, part of the way it works is that it's writing and it's trying to sort of predict, use its knowledge of the works of Shakespeare, for example, to predict what would be the next word it would use in a new poem it made up in the language of Shakespeare or whatever. And so so that this prediction ability requires a lot of process, a lot of compute, and that compute has been the models have been getting bigger, better, the compute more cost effective, and it's finally gotten good enough to be looked at by the public. And this is in part being powered by bigger and better GPU chips, which were initially made for graphics and in computer games that needed massively parallel processing instead of the kinds of serial processing you get with CPU chips in computers. And so gamers, in a sense, paid crazy amounts for their computers for years in order to get these better graphics chips, which now turns out are very good for AI and now more cost effective and affordable in providing better compute for AI. And lastly, there's a story that comes from people like Ray Kurzweil and Peter Diamandis that you often get apparent breakthroughs for the consuming public when you get a change in the user interface. When the user interface goes from the DOS interface to the Windows interface, suddenly that's perceived as a huge breakthrough by the public, and you might have a takeoff in sales of spreadsheets and word processing software and email software because people are now using Windows. Well, that came in the form of the chat interface. So literally taking a chat interface, putting it on GPT-3 or GPT 3.5, is what made it usable by 100 million people, instead of formerly you had to almost code your questions to it. It didn't readily understand chat. So those are just additional things I'd say is what's exciting about the last 6 months or so.
Yeah, no, that's right. I think that's right. I mean, I think it's these breakthrough products are often in retrospect the most obvious, right? So the fact that it's been made to be so simple, easy to access, and frankly now there are even these secondary apps that you can download the App Store that are really just Chat GPT to make it even simpler, right? But that certainly is true. And further, to your point, I mean, there has been a lot of progress behind the scenes that, and some more recent than others that have made this more possible. There's tremendous computational power that's necessary, and I think we probably all read it's in the billions of dollars, hundreds of millions, billions of dollars of computing power to create these these original large models, which then of course can be fine tuned. But it's also the other interesting factoid is yes, these are the same processes that can power a lot of cryptocurrency mining. So maybe there was even an effect that, hey, now that cryptocurrency is tanked, for now, what are we going to do with all this, GPU power? Well, I guess, we can power, tools, things like ChatGPT.
So I think literally in places like Miami, you have teams overnight changing their priority from crypto to AI, and they don't even have to change the chips when they do it. So why don't we step back a bit? We've been talking about generative AI using large language models. What are the different kinds of useful AI in healthcare? For example, there's been a lot of buzz around computer vision in healthcare for things like pathology. And people may not have heard of machine learning. Is that AI? Is that not AI? Is it part of AI? Can you give us a little bit of an overview of what are the kinds of different technologies we're talking about, especially if they're likely useful in healthcare?
Yeah, that's a great question. AI is one of these things which is definitely the term is overused. It certainly describes things that are not classically AI. I was in Las Vegas a couple months ago at a conference about AI and HR. And it's a topic I'm interested in because I've got, hundreds of people all over the world, and I'm interested in what tools can help me drive collaboration and connectivity and community and so forth. And so I went to that show wanting to learn, the latest. And I was very curious about the exhibitor floor and seeing, what the latest, greatest. And it's funny, I'm not sure actually, even though the whole conference is about AI, I'm not sure I saw a single product that was truly AI, It was kind of like, I would see these product demonstrations and I would say, that's just a database call, that's not artificial intelligence. And also, there's a lot of baggage because of all this kind of hype, this, in Hollywood and so forth, the Terminator and all these things. And as technologists, we used to joke that, marketing calls it AI and, software developers would call it machine learning or something like that. But, but to answer your question more directly, AI is a broad term and it's real. It's been around for a long time, as we said. I think for my non-technical, friends, I would describe these umbrella of AI of, having a couple, kind of key categories. Much of the AI that's kind of out there, it's been out there that predating kind of the more recent generative AI, I would put in the category of machine learning. And, more specifically, machine learning are really kind of systems and techniques that are designed to find, patterns. And, many machine learning systems are things that we would call classifiers, which are tools to put things in a category. And the classic example that I use, I probably overuse, is that, Google is very good at discerning a picture of a cat versus a picture of a dog. Like you and I can see a picture like that's a cat, that's a dog. But the fact that, the computer's been trained to do this is really interesting. It's really fascinating, I think. And of course, they did that by feeding, millions of pictures. I think it was like 3 or 4 million pictures of cats and dogs, and then providing supervised and unsupervised training of the models. And after a while, the system began to see patterns. Pattern, like, as you and I would describe it, maybe a cat's kind of more feminine and a dog is maybe more masculine in terms of their features. But the way kind of and that's not always the case, right? It's a generalization, but the way, machine learning, these classifiers work are to determine patterns that might be, the ratio of the nose to the eye, to the distance between the nose to the eye, and the eye and eye is, and a bunch of other parameters combined suggest high probability it's a cat versus a different set suggests it's a dog, right? And so, these patterns are determined by feeding these systems lots of data, and it's able to make these kind of classifications. And it's fascinating because, some of, how Google is able to determine that picture is a picture of a cat, is not easily describable by human language, right? It's kind of more algorithmic and mathematical, and it's just, part of the kind of the magic and the mystery of AI. And to your earlier question, is this useful for digital health? Of course it is, right? Great example, of course, is, we think about population health, risk stratification. Basically they're using classifiers, and these classifiers don't have to be binary. They don't have to be black and white, dichotomous, cat or dog, right? But you can train these systems on classifying multiple parameters, which help you, predict, a risk level or something after looking at lots of data. And at, Newfire Global Partners, we've been doing this, the company's about 8 years old. We've probably been doing this for about 8 years. And we've got many, many examples of building these systems for our clients. My favorite one is a drug adherence problem that we worked on. Really cool. This is for a population in South Africa, where, as you know, the incidence of HIV/AIDS is pretty high. At the same time, the medications are so good. You can have AIDS and take medication, and you can be non-infectious for the rest of your natural life, but you have to keep taking the meds. And one interesting, almost perverse problem is the medication is so good they think they're cured. And so for drug adherence, it's very important that people stay on meds, or else they become infectious, they make other people sick, and it's a bad thing. So we actually helped build a system to try to predict, and we were able to successfully do this, which patients were most likely to stop taking their HIV meds. And then we would give that list every week to nurses, who would then reach out to the population. And that was, I think, extremely fulfilling to see it work. And it's funny, these projects, you start saying, I can't give you a priori knowledge that I can't claim a priori, that this is going to work, but we're going to test this out, look for a signal. And, this is working with high confidence, in some ways validated by the nurses because they're very intuitive. And for them, they describe it as witchcraft. Just kind of like, wow, how did your system know that guy was going to stop taking meds? That was the call I needed to make. And, even when we study this kind of, again, it's hard to describe in human words, but algorithmically, it's something around, its name is social determinants. It has something to do, did the person kind of reschedule their appointments? And that seems to, again, it can only be described mathematically, but that was some sort of indicator that they were thinking about stopping their medication. And, when I talked about this with friends in data scientists and so forth, they were saying it's really odd. You'd think it was the person who didn't show up at their appointments anymore. That'd be the person that stopped taking the medication. But talking to the nurses, one idea, theory is, well, those folks, there are people who know they need to take the meds, and that's why they don't go to the appointments. It's almost like the patients who kind of hesitate and not sure. The system, the machine learning somehow picks up the pattern that this person's starting to waver about the necessity of the medication. So, so that's a great example of, traditional, can I call it, machine learning? And like I said, we've done many, many projects about that. And I think, as you know, healthcare has become increasingly data oriented, and these are the great things that we can do, with the data.
So that's great, and that's a great example. Both the example of machine learning is feeding, Google's machine learning program hundreds of thousands of images of cats and dogs and letting it figure out the difference between them, so it can now accurately do it afterward, and also predicting who's going to stop taking their meds. And I hadn't heard of that application, but that sounds like a great one. Can you tell us more about, so that's where AI is kind of fitting into healthcare. What about generative AI? Can you tell us more about how generative AI, what it is, and how it could fit into healthcare?
That's great. Yeah, so again, this kind of classification is an example of kind of traditional, or I would say almost mainstream machine learning. Those techniques are improving all the time, right? So that is not it's not settled business, right? It's the settled technology. It's still evolving. On maybe a related and separate path is generative AI. And generative AI, it's a different approach than the classifiers. Instead, generative AI, it leverages what is known as latent data. And latent data, it's a statistical term, right? These latent variables are things that cannot be observed. They can only be inferred from other observable data. So a great example that I often give is economists use the kind of latent happiness variable, right? Which is it's impossible to measure really if population is so much happy, but it can be inferred by other variables like the amount of time population is being spent on leisure or household income or level of crime rates and so forth. So that's kind of a statistical term of kind of latent data. So things like ChatGPT and Midjourney, which is a kind of AI art generator, which I'm a big fan of, by the way. Those are current generation AI tools, and they leverage basically the latent data. And when I was at DHIS, I gave a talk, I gave a presentation, showed a couple examples. I showed a poem that was "Twinkle Twinkle Little Star," written in the style of William Shakespeare. I also created an image of kind of a 5-year-old Asian American girl in a style of like English Tudor royalty. And of course, these things did not exist previously. There was no British princess in the 15th century that looks like my daughter, right? But the output we were able to create with ChatGPT for the poem, and also this image from Midjourney was it was very impressive. And they were able to do the way the system was able to do that was to pull this from the latent data, this correlation of things that we don't see, the pattern, right? So instead of looking at a pattern to classify, it's going into the latent data to find a pattern, to take a poem, a well-known poem, and now correlate it to things that make us think poetry is Shakespearean. And that there's a mathematical model, statistical derived probability in the latent data that generates that. So it's to me, it's fascinating. It's super exciting. And again, a theme that you're kind of hearing from me, it's actually been around for a little while, right? So, there was a key article, research article by Google, came out, I think, in 2017, 2018. And that was the research that generated something called BERT. And I always kind of forget what the term means. It's like bidirectional encoder representations from transformers, BERT. Most people in the industry just call it transformers. But this kind of research and this tool that was created based on the research back in 2018 is what made generative AI possible. And then later was kind of the tools that created large language models and then allowed things like ChatGPT to be created. At New Fire Global Partners, we've been using BERT since about 2019, about a year after the research was done. And we've also applied that to very interesting problems in digital health. We don't typically share the names of our clients, but we basically use these transformers for a company that basically wanted to automate the prior authorization process. And so for those of you who know prior auth, it's historically a laborious problem. There were companies that tried to attack it before, but it was really these data call centers of people who were really kind of doing things behind the scenes. And so this client had a great idea of using the latest artificial intelligence to try to address that problem with automation. And we helped build that, using transformers like BERT. And it worked. And that company was ultimately acquired by by Olive AI, which you might have heard of, and grew. And Olive AI, I think recently was it's kind of now a little bit defunct, but it was acquired by Availity. And I don't know. I don't actually know the details of the transaction. I think it was an asset purchase. But the cool thing is that technology we created, that was a key asset that's continued on. And so, again, so generative ChatGPT is all the craze, but these concepts of generative AI have been around. I think of 2018, 2019 as not exactly recent. It's been around for a little while, and I think we have examples where these tools can be applied to great effect and automation, in healthcare, and of course. Prior auth, there can certainly be benefits to patients in terms of, shortening the time to some of these decisions and so forth. Right. So to me, this is something, pretty compelling, and something that, again, another example of something that we've done that I'm really proud of.
That's great. Thanks. My next question is, what are the business opportunities for this in healthcare? But I also want to, for our audience, to open it up. You guys feel free to ask questions in the room chat. I was part of an online discussion with a number of experienced people in healthcare. We were talking about generative AI and what it could be used for. And we saw possibilities, but also challenges in using it. For example, that generative AI can be wrong, for example. One of the opportunities that came up was accurate risk coding of patients by healthcare providers for payers. That was an intriguing example of a use of it. So, a physician might keep an accurate medical record, but spend less time, and nevertheless, the case would be accurately risk coded for medical records and for payers. So that was an intriguing one that I heard. But what do you see as the business opportunities in healthcare for AI and generative AI?
Yeah, it's interesting. We get asked that a lot. A lot of our clients are, private equity, VCs, some tech startups with, lots of ideas. The crystal ball is not always clear, but I can tell you there are a lot of opportunities, and I kind of joke, what else is hiding in the latent space, right? What questions should we be asking that we haven't asked yet? And to me, I think an area of drug discovery, to me, that's a particularly exciting space, because there's a corpus of tremendous amount of data, about these molecular structures, their applications to therapeutics. I think it's very interesting to use generative AI to perhaps hypothesize what other therapies might be available. And of course, these need to be developed and tested and so forth. But just as one example, when I think of impact to society, all those incurable diseases that, maybe could get cured or have therapies. To me, the one reason why I've been so all in healthcare for most of my career is, the benefit to society is the exciting thing. And in that particular example, generative AI, could really could be a game changer in such a positive way, where even if AI generates just groundbreaking progress there, the benefits of society is it could be so tremendous. And I think our thoughts on AI will evolve even more so. I think there are other also areas, as you described as well, that.
By the way, just to jump in there, that's really interesting. And I hadn't thought of that before, but an interesting analogy is that famously, oil companies have huge amounts of seismic data they have been collecting for 60 years of spots all around the world. And they keep going back to data, including old data, because geology data doesn't change that much over time, and applying new ways to look at the data they collected very expensively to guess, this part of the Permian Basin, this part of the Gulf of Mexico, this part of whatever, we didn't spend the money at the time to explore those areas, but we're re-looking at our data, and maybe we're applying generative AI to it, not OpenAI's ChatGPT model, but rather a our database, their engine on our database, and now we can go back with some new theses about where to find the oil. So likewise, there are companies that have enormous amounts of data on molecules in the human body that are affected by drugs, and also the shape, the molecular structure of successful drugs and failed drugs and drug candidates.
Yeah.
And it's the way these interact. For pain relief, a certain large molecule drug will bond in a certain way with a certain part of the body that people with certain genetics have, or whatever. And we don't have enough people who are deeply immersed in that to really explore all the possible opportunities. But if your database is not whatever is feeding ChatGPT today, but rather your database is that company's proprietary database of this information that's collected over years, and then you put that engine on top of it, it might steer you in a direction. Hey, here's a molecule that overcomes the blood solubility issue that you stumbled on for all those years ago, and you could never make something to inhibit this molecule in the body because of the blood solubility issue. But now we think we found one for you that you overlooked in the past. So very interesting. I hadn't thought of that. And I think we're talking about a generative AI engine on top of a company's proprietary data, as opposed to whatever data is in OpenAI today, which we don't actually know. It's a whole lot of data. It's a whole lot of data, but we don't know we don't know what's in there, and we know that proprietary drug data is not in there, probably because that's owned by companies that never gave it to OpenAI.
Yeah, well, that generative capability is now inherent in these large language models. So, in this example with the the molecular database, more is always better, but it doesn't have to be at a scale to create the large language generative capability, right? So, as an example, we do something that's mundane at Newfire where we only have hundreds of employees, but we can feed employee survey data, NPS scores, and so forth, and ask ChatGPT to detect trends and so forth. And it's certainly capable in doing that. So yes, so this is definitely personally a very exciting area. I think there are other areas to your earlier question of opportunities in healthcare. Many more that we haven't thought of yet, but I think of Nuance. Has invested a lot in generative AI to try to improve clinical documentation, right? I think not everyone appreciates that clinical documentation has actually suffered since the adoption of EHRs, right? Having to do these, drag and drop down menus have made clinical notes less useful, and so generative AI has the ability to improve that. I think you've referenced before, quite a few companies, are using AI assisted evaluation of radiological scans and pathology reports. The argument being, why utilize a fallible human who might see a million cases in their lifetime when you can, use a system that is seeing 10 billion cases or whatever. So, that's exciting. Obviously in these models, I think in the near term, it's got to be kind of doctor in the middle, right? I don't think these systems should make those determinations by themselves, but you can imagine the things that might have been overlooked. That the AI can certainly support, assist, and augment the physician.
So, when we hear about people using generative AI today, it's very often in a context of boosting productivity of knowledge workers. So there have been a couple of media shops that have said that they're laying off journalists because they can have the stories written by generative AI. There has been a big controversy about Hollywood screenwriters going on strike at the very moment that there's some generative AI products that are capable of writing Hollywood screenplays. And then there's been a lot of talk about really impressive results of generative AI being applied to an engineer is literally coding, and then generative AI looks at the code and spots a logical error, or alternately, and then helps to debug the code. Or alternately, you get code and you ask generative AI, explain to me what the different parts of this code are doing, and it literally will explain to you, like a true expert, what the code is doing. And so, and we've also heard that some naughty law firms submitted cases to a judge where the briefs were written by generative AI, which then had hallucinations and made up sources, and the judge actually read the briefs, which they don't have to do, and checked the sources, which they don't have to do, and found that they didn't exist. So that's an idea of some stories we've heard of productivity, but you run a software development firm. Where do you see the use of, say, in-house? They could literally use OpenAI ChatGPT or Microsoft Bing Chat AI, which are extremely similar products. Or alternately, could they get a generative engine and apply it to their own emails, their own chats, their own code base, their own databases? What do you see as the uses for productivity in the enterprise today?
Yeah, no, I think there's huge potential and it's exciting. Was it late last week, less than a week ago? I was actually in Croatia. We have 3 offices in Croatia. And I was lucky enough to present with Will Crawford, our CTO, at the annual developers conference. I think we were in front of like hundreds, maybe 1,000 software developers who were both excited and a little nervous about these new tools. And the great news is I do think it's a huge opportunity of productivity. We actually at New Fire, we've been trying to build hybrid teams, these AI powered software development teams. People forget commercial software, it's written in teams. And now the idea of including some AI as part of a team member, we've been doing that. We've been experimenting that since 2017. It's been something we call Novel Heat, which is a play on New Fire. And again, I joke that I'm the only person in the world who thinks that's funny, but I think there are many areas of advancement, and ultimately what that means is faster, better, and cheaper technology for our clients. And that means faster innovation, more things that, we can do. When it's easier to become a technology company, I think a lot of new technologies and useful technologies get built. And I won't go in great detail. I don't think this is a technical group we've got today, but a couple areas, we definitely focus on quality. There's something called anti-patterns. These are software designs that look good and they work, but will fail down the road. So an example would be a pattern to build a table would be 4 legs. You could build a table with 3 legs, it'll work, but it's not the best way to do it because you add more load or there's more instability, it may collapse, right? So we used AI to build systems to double check our code to make sure we were building it in a pattern and not an anti-pattern approach. It was called an anti-pattern detector. And it's becoming more relevant as in the future when AI writes software, we need AI to double check the software. So it's interesting. The other thing is around, I think a lot of discussion around kind of pair programming. It's kind of a luxury. In some companies that are well funded and they don't have, hyper aggressive deadlines. You code in pairs. You have a coding partner, and you check each other's work, and you kind of, it's kind of a pilot co-pilot. You're making sure, no one's making an inadvertent mistake. But it's a luxury. It's expensive. And now with the advent of AI, we envision teams that have, AI coding partners. So the developer is coding, doing his or her best work, but you know what? There's a double check. It's a whole, we could spend 2 hours on talking about the evolution of this and how to get and prepare for these types of things, but it's something we've thought about deeply, and something we're very excited about. There is possibility for misuse and there's safety issues, but this is why I think to take this approach requires, some thoughtfulness. And again, we've been thinking about this for years. I do worry about a little bit of if people get a little too fast and loose with this. There are software developers who are not, properly trained. They classically cut and paste source code. You can imagine AI applied in a maybe inappropriate way becomes kind of cutting and pasting on steroids. And so I think that's a danger for the industry. One that we're trying to educate and warn people not to call down that's kind of fast and loose, path. But I think applied appropriately, huge opportunity, and I'm super excited about it.
I've heard intriguing examples of people who, don't have the hard skills, but the most obvious example is with these graphics AI systems. Someone will type in, they'll describe a new corporate logo, and then the system will give them back a well-designed graphical image of their company's logo, let's say. And then they can say, make 50 variations on that, and boom, they'll get 50 variations on that. And they can look at all the different logos and pick one. And likewise, so that's when it comes to graphic design. But likewise, I've even heard that you can get someone who is not a coder or developer will describe an app for the Apple App Store and will describe its feature functionality, what it does, and then OpenAI, ChatGPT will write the code for that app, and with minimal further steps, it can be submitted to the Apple App Store and be approved as an app. Now, it may not have advanced functionality in the current version of it, but that person didn't have to know how to code to do that. Now you could imagine, they say make a bunch of variations of this for a bunch of apps, and so this really empowers someone who didn't have the time, or maybe couldn't be a graphic designer, couldn't be a coder, can now do some of these interesting things. You also get to the level of that law firm that submitted the bogus brief to the judge as well. Yeah. So you run that, if you're not already an expert, you run the risk that you're going to be holding this thing you think works, and then it turns out that it's wrong or something. So I think we're going to enter an era of a lot of instances of the story of the lawyer who submitted the bogus brief to the judge as well. So, but how do organizations become prepared for to take advantage of AI, but also to avoid the pitfalls of AI?
Well, that's a great question. And not one simply answered, but I think maybe to put some headlines on that. I mean, I think to leverage the promise of generative AI, there are a few things that should be top of mind. I mean, first of all, we have to remember AI. It's all powered by data, and all the forms of AI we talked about. Remember, it's fueled by data. And so when we advise companies about starting to create their AI strategy and so forth, there's a little bit of an audit. We kind of go back to basics, and then we say, hey, if you don't have data hygiene, if you don't have data lifecycle management policies and so forth, you're kind of not even really at the starting line yet. So there's a little bit of trying to get some hygiene in place before you can really build on top of and leverage promise of generative AI. I think there's also two more points. One is around, I think, as you said, you have to be very specific, and so it puts a emphasis on not like how to build, but what exactly are we building? Because if you're not clear, you're going to find the AI is going to build what you said, but not what you wanted. And that can actually be dangerous because not all of it will be obvious, and you may launch the thing and it may be touching patients and it built what you told it to build, but not what you actually wanted, and all the edge conditions and all the safety. So you have to be an emphasis on being very clear about what the heck we're doing here. And then there's a need, and this may be tough for certain organizations, but there's a need for fungibility. Like AI, it's about automation, really. And if there's only Billy Bob or Sally Sue who can do the job, that's a blocker. If they're non-fungible, it becomes a blocker to bring in the automation. Beyond that, there's a lot of change management, and about really setting, really understanding what the goal is. Like, what are we trying to achieve? Where are we? Take a no BS assessment. Where are we today? And crafting, pressure testing, agreeing on an AI strategy and a policy. And then there are certain skill sets that need to be brought in the organization. And then beyond that, it's your kind of, almost your standard change management, which is implementing, piloting, monitoring, seeing what worked or didn't work, and then iterating and fail fast and improve quickly as well. But the promise there, and I think if you've done correctly, can be a lot of confidence building, a lot of excitement. And I think this has to be done because at the same time, look, we're seeing the earlier stage companies embracing this and not the law of the jungle, maybe, relevant to the first part of this discussion. Many of those will fail. Maybe they won't get funded, but some will succeed. And those that succeed will start to become competitors in the industry with a very low cost structure, with a very different cost structure. And so the incumbents today, if they're not embracing this, they're, can I say, believe me now or believe me later? It's a lot cheaper if you believe me now. If you believe it later, it's far more expensive, right? So, but there are things to do. I think we call it an AI transformation, which we help clients through, and I think that makes a lot of sense. The pitfalls, there are many, right? There are many. You talked about hallucinations. There's there's a really we have there's a reliability and accuracy need that's required. I think people talk about AI, talk about bias. Humans, we have our biases, and that because the data powering these systems are based on human generated data. There's a risk of institutionalizing, even amplifying bias, right? And there is, especially in digital health, I think one thing I worry about is explainability and transparency. At one level, I'm super proud. I mean, I can't tell you how proud I am of the drug adherence thing that we built. I really feel we have reduced infections. There are people who have not gotten HIV/AIDS because of this system. I'm so excited. And at the same level, I can't exactly tell you how the system works. And it's a system that's prioritizing care. Now, thank goodness, like nurses tell us, wow, it's really saving them time. It's making them far more effective. They're not wasting their time on dead ends. So that gives me comfort. But at the same time, it's weird to have a system where we can't exactly articulate how it works. And it's making decisions about, who gets care first, right? So that's, to me, something I wrestle with,
So,
yeah, go ahead.
But by the way, a really interesting point on that is that before the pandemic, there were some government officials who were talking about AI. They were trying to be, I think they were in FDA, but they were talking about AI. They were trying to be forward thinking about AI. And they brought up and stressed the explainability issue in AI. And there's a way to frame it that's very stark, which is that that AI has been used very successfully, and there's still a lot of investment going on in the world of diagnosis in healthcare. So the best example being computer vision AI in pathology and radiology and other areas like that. But also, it doesn't have to be computer vision AI, it's other areas. And so you could have a system that, let's say it's an expensive system, and an expensive AI diagnostic system, and highly trained doctors get their diagnosis right 95% of the time. Your expensive diagnostic system that is explainable gets it right 97% of the time. Great, that's great. And then when it's wrong, you can look and see, it can explain why it did what it did, etc. Then you might get a cheap system that has a 99% accuracy, but is not explainable. And so what these officials were trying to say was, we would rather have the more expensive system, so that's a drawback, that has a 97% effectiveness rate. That's a drawback, because you could have a cheaper system with 99% effectiveness, but it's explainable. So when it goes wrong, we can improve it, we can fix it, and we're uncomfortable in medicine with things that can't be explained. So I thought that was a very interesting, weighing those very challenging trade-offs that may have to be made, and then also the FDA putting a stake in the ground as to what may be coming down the pike. So,
yeah, it's fascinating. It'll be interesting to see how it evolves. I think there'll be systems that will be making decisions that, frankly, are unexplainable, and I think there'll be use cases where, I don't know. I mean, society may have to just accept that. I don't know. I mean, we'll see. But that also leads to, I think, another risk, which is this. I think there's a real risk of a dependency on AI. And I think I've given this kind of example. I feel like, and especially, when you don't know how it works, right? So, and I joke, I make sure my children know that Alexa is not a human. Yeah, that's a robot. But I do see a future where, as I told people, when we don't know the answer. In the previous generation, my mother's example, she would go to religion. She would go to the Bible. Like, gosh, I don't know what I'm supposed to do here. I think in the future, my children instead of religion, they may go to AI, what do I do here? Ask the robot or whatever. And so, that when we outsource thinking, that scares me. And so this dependency on AI, but what happens when there are these decisions that, gosh, when AI just gets it right all the time and it's really difficult for us to figure it out. And the reward is something very valuable, like, mom gets to live or something, it'll be very interesting as how society and how the policymakers decide to, to navigate something like that. And, I think that's certainly within our lifetimes and probably, within, 3 to 5 years. So, very interesting. And then finally, I think there's some regulatory issues to your point, which, we don't even know how this will be regulated. So if I'm an entrepreneur, like I hate the idea of building a business where I might be regulated in ways that are not known to me yet. Right. And that's a risk. That's a risk. So, it's an exciting time, and I think will be a net positive. I'm an optimist. I don't think the Terminator is going to come and wipe us off the earth, but I think there will be a lot of thorny issues that I hope we'll have a lot of smart people working on it, and I hope we'll be very honest with each other. I think that's necessary.
So this. I think an interesting way to summarize this is something that I heard proposed by Garry Kasparov, the famous chess champion, who was the reigning grand master at the time that IBM's AI chess program beat him, and was the first ever to beat a reigning chess grandmaster. And he noticed that the international chess leagues require there be one human playing one human with no assistance, and then they ban the use of AI in chess. And then AI companies will have sort of chess matches where they have one AI engine playing another AI engine, or possibly an AI engine playing a grandmaster. And these are not recognized by chess. But then what Garry Kasparov saw and created was a new league. And the new league is a chess player and an AI playing a chess player and their AI. And the way that works is that you're two chess players playing each other, and you're allowed assistance now. And then your AI tells you the move it would make, and instantly, based on the move that the other player just made. But then you as a human get to decide what actually to do. And very often you don't do. You're informed by what your AI recommended doing, but you choose a different move. So you may say, I'll be more aggressive or less aggressive than my AI wanted me to be, for example. And he found that a human with AI, that almost always an AI beats a human. But a human with AI usually beats AI alone. And so now he calls this league a centaur league, named after the idea of a beast that is half human, half horse. So the human, that's us, and then the half horse part, that's the AI that we're with. So you have centaur playing centaur. And this is an analogy for all professions and probably for life going forward, because in the future you're going to have your doctor with your doctor AI, your nurse with your nurse AI, your lawyer with your lawyer AI. We're all cyborgs already. We can't function daily without our smartphone. That will have an AI that is giving you advice, tells you your next best action, gives you recommendations, and then you get to decide what to do. But we're all centaurs now, basically. Is my takeaway from this.
That's funny. That's funny. The other thing I've heard about AI and chess is, I think someone also said that famous chess game, this is the end of chess. But the reality is, like, chess has actually become more popular than ever. So, there are some unintended consequences, good, bad and good, I suppose.
Yep, that's great. Well, good. Well, so for time reasons, we have to wind down now. But any further thoughts, Steve?
No, I appreciate being part of the discussion with you. Hopefully you found this interesting, and hopefully it was useful to the attendees.
Thank you so much. It's great to talk to an actual practitioner beyond just playing with ChatGPT myself. It's great to talk to actual practitioners using this at the enterprise level and the personal level as well. So thanks for joining us.
You bet.
So you've been listening to Digital Health Investor Talk with host Stephen Wardell. Our thanks to our guest, Stephen Howe, who's an industry-recognized technology entrepreneur and investor. He's currently the chairman and CEO of New Fire Global Partners, a tech advisory firm and software development firm that is based here in Cambridge, Massachusetts, with team members worldwide. You can follow him at twitter.com/Stephen Howe. Our show next week is Selling into the Provider Budget in 2023 with Mark Anderson on Wednesday, July 12th. Mark Anderson is the CEO of AC Group and a former multi-time hospital CIO, and he specializes in the evaluation, selection, and ranking of vendors in the PMS, CMR, EHR healthcare marketplace. Thanks, and we'll see you all next week. Bye-bye.